All right, let's do it. All right, thanks everyone for coming. I'm Brittany Barchok. I'm the head of marketing at Tribevest. I'll do a little intro here in a minute. And then we've got Richard McGurr from Property Llama. He's also a podcast host joining us.
Man of many
And
talents.
yes, a man of many talents. And we're going to talk to you guys today about how to turn your best LPs into fund managers so you can raise more capital compliantly. So let's dive in. We're just going to have this disclaimer here for everyone to read that it's not legal, tax, or investment advice. You need to do your own due diligence. And yeah, we're not giving you advice here, legally or from a tax perspective. So again, Brittany Barchok, head of marketing at Tribevest. I've been with Tribevest for about 4 years now. I'm a founding team member, to be exact, but I've worked with hundreds of fund managers of our early adopter program, and really created and scaled the operations and processes around onboarding our fund managers, and really deeply understand pains and needs of fund managers, which has helped me as I transition back to my role as head of marketing at Tribevest. So that's what I'm focused on scaling right now, and really excited to talk to you guys more about what me and Richard have been working on the last couple months.
Hey,
Richard?
everybody. So I'm Richard McGurr. So I'm a fund manager at Property Llama Capital, also related to Property Llama, which is a software platform that helps landlords, small landlords, understand their portfolio. And then a part of that process, we help landlords who want to transition from active to passive invest passively through fund to funds, which is the model that we use. So as a GP over the past 3.5 years, of course, with partners, I've raised about $70 million. And I'm the host of Unlimited Capital on the Best Ever CRE Network, available on all your favorite podcast platforms. So I have a partner, Chris, who's also an influencer, but he likes to talk about investing all day. I like to talk about capital raising, period. So yeah, and you can follow me on Twitter at RJ McGurr or send me an email.
Nice. All right, so let's dive into fund to funds real quick to just kind of level set with everyone about why we're here and kind of what Tribevest focus is on. And so fund to funds are proven and safe vehicles to organize capital with your trusted network. So we like to call this like invisible wall here, and we've got our GPs on the left-hand side that are putting together the syndication deal. We've got our limited partners that are in their network, but then there's this invisible wall that exists where there are hundreds of thousands, millions of LPs that are qualified accredited investors that don't even know that they are. There's
About
just
11 million households.
Yeah, yep, that's right. But they just don't know how to get into the private markets. It's something that is scary. They may not know someone that can help them or get them to understand. There's a learning curve. It can seem scary. So there's this big opportunity that exists with a fund to fund to raise capital from these LPs that don't know that this even exists. So that's what we're gonna dive into. And really the problem that we're shaping here for sponsors is that there's just really been lower investor trust due to capital calls over the past couple years. You've probably all heard of a nightmare co-GP story as well, like two people who haven't worked together before, they do a deal, it goes south, and then they find themselves wrestling for control. And as a lead sponsor, like that's just incredibly stressful to navigate. So there's risk and compliance concerns that are baked into some of those other partnership models that exist, like co-GPs. And then some people think institutional capital is the solution, but it comes with a longer due diligence period, giving up more upside, and potentially having to offer managerial or takeover rights. So most sponsors hit a ceiling not because there's a lack of deals, but because there's a lack of capital to fund those deals. And the number one problem with fund managers that exists today is that pre-existing fund managers, they have dozens of deals being served across their table. Like they're getting emails every single day from different lead sponsors about do my deal, come in, raise for me. And it's really hard for lead sponsors to stand out.
Yeah, and I've been in this space a while, and it's my opinion, which I shared with Brittany, that there are more sponsors, lead sponsors looking to work with fund managers than there are fund managers. So obviously that's a very tough battle to fight.
Yeah, 100%. And so the solution we found, and what makes me and Richard really the subject matter experts on this because we've been working on it for several months now, is that creating an internal fund of funds program to consistently identify, qualify, and onboard new fund managers is really the way to go. So we're going to really dive deep into how to tap your existing LP network and identify, qualify, and onboard them to be reoccurring fund managers and really help them build a business.
Yeah. So how to turn your LPs into fund managers. What we've come down to is like really there's four pillars of this process. Number one, which is the focus of this webinar, is you have to identify great candidates. So the fact of the matter is that the vast majority of people are not cut out to be fund managers. And like just because they invested in your deal does not mean that they can go start their own fund of funds and then raise a bunch of money. And that, you know, any fund manager you work with is going to be a large investment of your own time and possibly money. Time is money after all. And so we think that like picking winners early or picking high potential people is an incredibly important part of this. Then what you do second is you create demand and awareness of the program. You do that through webinars, typically creating a guide or something like that. And then in order to convert them into fund managers, you have to show them a clear path to like building wealth and building a business, you know, through becoming a fund of fund manager like myself. And then four, you got to build a repeatable system for them for fund manager success where they can just like jam, raise money, make money, build a business.
Yeah.
So, what makes a great fund manager? And this was really like the bulk of the research we did. And that where this came from is that both myself and the Tribevest team have obviously saw a lot of action, and that we're obviously like incentivized to have both lead sponsors and fund managers be successful. And so, what we found is that previous passive investment experience is key here. And so it should be a minimum of 3 to 5 deals with at least one going full cycle where they've returned capital. And so what this gives them is, I mean, they understand the mechanism clearly. And by that, I mean like, you know, partnership structures, waterfalls, the responsibilities, K1s, taxes, like they already know all this stuff, you know, so that they can explain it and run their own fund. Number two, and this is very, very important. Like this was when we basically went around the whole Tribevest team, in my experience, like picking who are the most successful fund managers we've ever met. Like, I mean, the true, like this is one of those things where it's very typically like beyond 80-20 rule, where like 10% of people raise 90% of the capital type thing. And all of these people were serial entrepreneurs and successful serial entrepreneurs. And the reason for that, which became like very obvious in hindsight, is that like being a fund manager is running a business. It is starting and running a business. And that requires like the ability to like execute, be self-motivated. You know, you got the persistence, whichever anybody who started a business knows that persistence is not an absolutely required trait here. And resilience. And they have the ability to like, you know, go out and sell because any successful business owner has a lifetime career of selling, basically.
Yep.
And so the other thing that is a requirement is that they have a existing network of other high income professionals. And one thing I wanted to add previously is that they don't necessarily have to have been an entrepreneur themselves, but the other thing that works is if they're a very senior executive at a successful company, because that's an entrepreneurial role still. Just wanted to qualify that. So they have a strong network of other high income professionals, you know, earning 3 to 500K, because one, this makes them accredited, and number two means that they have the income and like a large enough portfolio to justify passive investments. And so the common architects we see are medical professionals, tech executives, especially tech salespeople, like sales executives because, like SaaS salespeople make a ton of money if they're very good at their job and that they know plenty of other people that work in tech who make a lot of money. Serial entrepreneurs, as we said, and then real estate professionals. And what do I mean by that? Like lenders, agents, except that these specifically lenders and agents that have done investing themselves, which is a lot, but not all. And that a minimum viable fund manager is someone who can raise at least $500,000 for a deal. And then ideally, as they get better, $1 million plus a deal. And that these people are like already an authority of real estate investing in their network. And so that like, this is because, if you're like me, I talk about real estate and credit all the time, to people, and that people are already coming to them, like asking for like, hey, can I do deals with you? And previously they're like, oh, maybe I can make you an intro. They should already have people asking them about investments.
Yeah, I think like some of the secret sauce here is like, and what Tribevest firmly believes is that like people are pulled into the private markets. They're not really pushed in, and so they're pulled in with people they like, know, and trust. And so this is really a great indicator that that person is know, liked, and trust by their network.
Yeah. So red flags to watch out for, and I said this before, 90% of fund managers, even those who like try and become a fund manager, will not work out. This will be because, you know, we message pretty consistently that the minimum viable fund size is 500K. And if they go and shop the deal and they either raise nothing or can find one person willing to invest 50K, then they don't execute on the strategy, and nor should they. But conversely, you're going to have 1 out of 10 people call it who just are absolutely successful out of the gate, raise a ton of money. This is based on my personal experience working with fund managers, other successful fund managers I know. And so really you got to like qualify the person up front, and not everybody who comes to you and says, oh yeah, I want to do this, or I might be interested. Like you're going to have to invest a lot of time into that person, whether they succeed or not. And so it's better to be able to very early on pick your winners and invest in your winners. And so common red flags is someone who's never been an LP before, I would say. In fact, I can't think of someone who's been successful at this who hasn't been an LP or a GP. That could be that
Yeah.
too. They've successfully been a GP. People who say like, oh, I think I can go and build a network. Okay, well, that's like a 2-year journey, right? And we need people who can like hit the ground running now. Like if you're ever running a sales team, like that's how it is. You need people who can come in and jam. Um, and then people without proven business success, I would say, or who think that like, oh yeah, maybe I'll make some calls, maybe I'll make some money. That's probably not going to work out. And in our opinion, you can pretty quickly weed people out who aren't going to work and pretty quickly identify people who are going to work out.
Yeah, I think it just comes down to qualification. Like, make sure that you're actually qualifying people and not just getting them like pumped up about your deal or, what they think they can raise, but like actually like qualifying to make sure that they can be successful and then ultimately you can be successful.
So quick qualifying, the four key questions that we start with. And also we're going to be circulating a document version of this. I think tomorrow I have it ready. But do you have passive experience? Do you have deals that have gone full cycle and are going well? Are people already asking you for real estate investing advice? And like, what's your history as like either an entrepreneur or like a high powered executive? Like, do you meet all of those check marks? Because again, if I can't think of someone who hasn't met all four of these and been super successful, like all four.
Yeah.
Then, go into deeper qualification, have them start telling you about their network, their philosophy on business and like what they've done in their life. And then what you want to do at the end is like get a raise target from them, have them commit to a plan. Um, a, Something I've heard from Tribevest recently, which I really liked, is some sort of like participation agreement saying like, I will do X, Y, and Z. I will do the webinar. I will do this. I will do this. And then they should also be personally investing in any SPV that they set up.
Yep.
Again, have not seen someone be successful where they haven't done that. Also because like it makes it a lot easier for them to sell the deal, because then the narrative there is, I want you to invest with me on this deal. Like that is a much better angle than saying like, hey, I put together this security and no, I'm not investing in it myself, but you should buy it. Being able to say, hey, do you want to invest with me on this deal? I got us a really good deal because I'm bringing a bunch of people together. That's a much cleaner narrative there.
Yep.
So this is also Brittany really helped me with this. If someone green light is someone who like understands what it is, knows what it's going to take, and they're just like, yes, I'm in. In fact, the guy that I worked with, Brooke, who's been the most successful, was literally like, I don't even need to come on the bus tour because we were touring the sites. He's like, I don't need to be there. Don't worry. I'm going to fill the race. And then like 2 weeks later, he's like, done. Um, and that guy did the best of anyone in the cohort I was running at the time. Uh, Yellow light, I would say, is someone who's like really high potential, but then like lacks either the network, or light on experience, like could work out. Maybe they're going to grind really hard and pull it off, but it's definitely going to be more difficult for them. And then red light is going to be someone who like has not invested before, has not invested in real estate, really unclear, and they're like, "Oh, I'm just here to learn." I have not had someone who told me they're here to learn to work out because originally I had a thesis of going very wide because it's a numbers game type of a thing, and I was like, "Okay, we're going to go super wide. I'm going to sign up like 40 people in the cohort." Okay, the guy I told you about, Brooke, was the only guy who pulled it off. And he was the guy who's like, I'm in, it's a done deal. Don't worry.
Mm-hmm.
And who had like this guy's background. He has like managed the development of subdivisions before, like as a builder, like brought a builder into the US as like a senior executive. I mean, when we went through those archetype things or the various traits of the perfect fund manager archetype, he hit every single one of them. And that was like all in hindsight. Like I had this guy in mind. I was like, yep, yep, yep,
Mm-hmm.
yep, yep. And then when I met one of his LPs, actually, he's like, oh, I just invest in whatever Brooke tells me. So he
Yeah.
already had deal flow, you know. Um, and then here's another red light, which didn't make it on here, but it's anyone who just continues to ask a bunch of minutia questions.
That's what I
What
was
they're,
gonna say.
yeah, yeah, go for it, Brittany.
Yeah, I was gonna add the questions. Like we've seen it a lot of times where there'll be someone that's interested and they like may have some of those like green flags and not very many red flags, but the like biggest red flag is when they just continually ask questions and aren't putting anything to action. Like it just you can tell there's like a fatigue that comes with just asking questions all the time and you're really just avoiding the thing that you need to do, which is go raise capital.
Yeah, it's analysis paralysis.
Yep.
Yeah, versus like anyone, I would say, like anyone who is success, like that directly relates to someone who's successful as an entrepreneur because those people just go, and
Mm-hmm.
they know like the way I'm going to figure this out is by like calling people and trying to sell them, like, or like
Right.
take action. Like that's the best way to figure out how to do this is take action.
Yep. All right. So we're gonna go through like a little case study here of like the opportunity for the LP. So if you were to identify someone in your network that seems to be a fit, we're just gonna go kind of through like that case study here and how that would work. So we're gonna use Dr. Brad here. He's earned trust and respect from his friends, family, and colleagues, and they wish they could invest with him. And like I said earlier, like trust transfers, like people get pulled into these deals. And so we're revisiting here again, like Dr. Brad here is creating a fund of fund that's investing as a, I guess, big LP into the syndication deal. And he's pulling in that trust and respect of his friends and families, and he's investing alongside of them to get bigger and better terms. So like being a fund manager, you can earn $100,000 for organizing a $1 million SPV, like just very plainly. Um, and so like Dr. Brad here, like as we mentioned earlier, like like doctors, they can make some of the best fund managers. And so like a high earning MD, his goals financial freedom, W-2 optional. He's in different education and like communities. So like he is in Raise Masters, goes to the Best Ever conference. He's in different physician communities, like continuing to expand his network. He's got investment experience. So I think a lot of our fund managers also like started out on the active side. I know Richard, you did. And
Yes.
and over time, like they didn't want to deal with like termites and toilets
No,
and
I hate
all of
being a
that
landlord.
stuff.
I will I will admit that I really hate being a landlord.
Yeah, it sucks.
Yeah.
And
I love
so,
building businesses though. There
yeah,
you go.
true. Yep.
Yeah.
So you get like that experience being an active investor by building businesses with it, but then like over time, like you don't want to be a landlord. So then you're investing as a limited partner. So doing some real estate syndications as an LP, but like can't figure out how to scale this without investing more time, money, and energy. Like that is constantly a challenge for someone that is like a full-time doctor. And but he's got a superpower. Like he has trust and respect from his network, and they wish they could invest with him. So we're kind of like setting up the perfect thing. And so you can see here, like also the path, like Dr. Brad, he's got his like single family rental flip. He's like scaling that single family, like using the Burr method. And then he's putting some of his time into real estate syndications. And you can see here, like he's just investing as a passive investor, 550K in, 100K out, like just learning over time. And that, but in the meantime, like he's building that network or has that network floating out here. And so with him, like building and creating a fund of funds, he can bring in that network and putting 50K in and get 200K out by being a fund manager. And so again, like, is Dr. Brad a good candidate for launching a fund-to-fund business? And I think there's three clear things here as well. Like he's already established relationships with lead sponsors because he's investing as an LP already. And because of that, he's got deal access and due diligence experience. So he can take that experience and help his investors now. And then he's got that network of the high net worth friends and colleagues that he can pull into his deals. And like for the economics here, like he can easily 3x just by becoming a fund manager instead of just doing a direct LP investment. So he's putting 50K in, 50K out as a direct LP. But like here as a fund manager, like he's getting 80,000 at exit. There's a 15% split from the after the pref and the admin fee. 20K up front because you're collecting a due diligence fee. Um, and then he's also investing alongside his investors. So he's putting in that 50K investment himself as well. And then if you take this even further, like instead of just doing one $1 million raise, what if you do one $1 million raise per quarter for 2 years? And so you can see here, you could, earn some additional side income, and that's great. But if you start to do this and build an actual business out of it, you can start earning some money to either replace your W-2 or just have a nice side business as well. Um, so the reasons an LP should become a fund manager, just to go over these again, like you get many of the benefits of investing in real estate without having to find deals, oversee renovations, or handle tenants. So that's great. Um, and then if you can scale your investing without putting 100% of your own money in, like you can invest alongside your investors, but you also don't have to do that as well. Um, if you raise $1 million, you get paid approximately 100 to 120K, so 10 to 12% of that. You get 2% or 20K upfront. So as you're raising from due diligence, you can collect an AUM fee over time, and you can get 8 to 10% back upon the sale. And then you can further scale that by 10xing those numbers and building a $10 million capital raising business without managing operations. And that's
Which
really,
is I would say
go
that's
ahead.
the choice we made as a firm. Is like
Yeah.
we love the fund of funds model because I would say very bluntly, I'm a sales and marketing professional, and so is my partner. And I get very excited about sales and marketing. I get very excited about finance too, and real estate. I think it's a great investment. Just like as I said before, between me and my partner, we do not have the desire to like go take down apartment buildings and manage the renovation and then like turn all the tenants and then like deal with a PM company and sell it. No, we just want to raise capital. And I actually think that like not only is it a better business model for me, but I'm of the opinion that being a fund manager is a better business model than being a lead sponsor. Like I
Yeah.
truly feel that way. I think it's great. Like
Mm-hmm.
I place the capital, I get, I mean, it kind of is implied about 20% of the GP through the various structures, except my job is like basically done when the check clears, you
Yep.
know? I think it's amazing. I think it's an amazing business model.
Yeah, you're just like you're like a big LP. And like if
Yeah.
you can outsource like those operations to other parties, then like yeah, like it just seems like a no-brainer.
Yeah.
Yep.
So how to market your fund of funds program. So the first thing you should do, in our opinion, is like promote and then host a webinar. And I would say you should host a webinar even if you don't have a big email list, simply because you're putting all of the information about the program into an organized and recorded like piece of content. And that's very useful because even if someone doesn't like attend the webinar live, is when you're like naturally having these conversations and recruiting, and like let's be clear, like this is recruiting. It takes a lot of work. It's very active effort on your part, especially to recruit the right person. Like you just basically have all the pre-recorded info. And you've also done yourself a big favor of like getting organized to write a slide deck really helps you, you know, writing clarifies your thoughts and thinking. I'm a big fan of writing. But it makes it so that if when you do have these conversations, you're just like, hey, check the webinar, then come back and let's talk. So you're not like completely representing the entire program over and over again. Um, that's also, by the way, how you should do your capital raises, but that's neither here nor there. So use emails. So, you know, send like I've actually really started studying this process. So there should be emails presenting the webinar. There should be emails presenting the program in general. And hey, are you a good fit? Apply here. The best emails I've seen, which I kind of wish I had adopted in hindsight, were qualifying even within the email.
Mm.
Like it's actually okay to add friction in a marketing process if that marketing leads to more qualified leads. And like the emails that I saw, I'll shout it out. DeRosa Group, Matt Faircloth, great emails. They were like, are people already asking you to invest? Like, if the
Yeah.
answer is yes, apply. If people are not, you may not be a good fit. Like,
Yeah,
yes, you
definitely.
should absolutely put that in the email because the fact of the matter is like you might fear that, oh, somebody's not going to apply because somebody's not asking him. Good, because that person can't raise any money. Like,
Mm-hmm.
that's great. Um, then, like I said, you got to build this pipeline and also use personal reach outs. You know, like you may have, I would say it's almost inevitable that like two-thirds of people who are great fits in your LP network are not going to register for the webinar. Because, like, you know, people get how many emails a day? 200. They probably didn't open it. I would say the moral of the story there also is send more emails. Send plenty of emails, but also like call the people who hit all of those, you know, check boxes that we discussed, especially if they've had success with you investing in your deals in the past. Like I think Brittany, the way you put this conversation is you've seen it successful is like, hey, I know you're probably going to invest in my next deal, but would you like to make 3 times as much by maybe like getting a couple of friends to come with you? Like that's a
Mm-hmm.
Brittany says that that's like a very winning conversation.
Yeah,
And
like if you can just like bake it into like how like it's almost like how you're like going out to your LP network now, like to get them to invest in your deal. Like you have your like classic how to invest slide, and it's like, do you want to invest with cash? Do you want to invest with your SDRA? Like, how do you want to do this? Plug in fund of funds there and say like you can raise 3x, like or get 3x the returns by doing this. And just plug like learn how to plug in those aspects throughout like your whole funnel.
yeah,
Can I actually add something to that?
let's do it.
Yeah.
Cool. Hey, so if you guys have many, my name is Rohan. I'm a marketing consultant. I've helped both of these sponsors here on the slide with their webinars. And one angle I've also, two angles I've also found to be very successful when working with people potentially are number one, like as exactly Richard said, like people who want to grow a real estate investing business but don't want to deal with the operations, like that is a very compelling, hook to become a fund manager. And then the other piece is LPs who maybe they've like used up a lot of their dry powder already, like their own personal capital. They still want to invest with you and still want to work with you, but they just don't have as much dry powder, right? Sitting around. So they want to still work with you, and that's where they can also raise money for you. So sorry about it, but I thought those were also good.
No, that's great. Yeah,
Yeah.
Rohan's the man, by the way. Helped us with the slide deck
Yes.
of the webinar, obviously. Yeah. So then actually this came from Rohan. Why don't you go over number 4? Because you're the one who came up with this, and I'm going to start adopting this.
Yes, for sure. So this was specifically with the top sponsor there, Nighthawk. This is what we decided to do is like any marketing process, a webinar is a funnel. So for example, like, their webinar, they had call it 150 people register. They had like 50 people join in live. And at the end of the webinar, they had about 20 people like fill out an application to say, hey, I'm interested in this. Like I've raised money before. Like they had about 20 people who, were good potential candidates. From there, it came down to a process of screening. And after they did the process that Richard outlined, like, the quick 5 minute, summary, the quick qualifying thing, after they went through that, they probably had about 10 people who were, potentials. And I think one thing they did that was very special was, they went out to the top, call it 4, and they asked for a LOI. And then a couple people like hesitated at the end. So it was good because if you had just had them raise money without signing that LOI and without that, they would have hesitated and then you would have been counting on their 500K and then it wouldn't have shown up and you'd be a little bit like, what the heck, right? Versus what they did, which I thought was powerful, was they got the LOIs. And I felt that when they had the LOIs, both parties were very clear. So obviously, they were able to successfully, raise capital. And
Yeah, I mean, and we could talk on another webinar or something like that. Is you're going to say you're going to record so many pieces of content, you're going to do a webinar, you're going to do a fund model, a fund economics walkthrough, you're going to do this, you're going to do this, because like you got to hand them your marketing blueprint and all the materials, but then you have to make sure that they actually execute on it and execute it on schedule so that they can, raise capital in time for your closing. And so this is stuff that they have to do anyways, but I think it's very powerful getting that like buy-in and, affirmative confirmation of they're signing their name saying they're going to do all this stuff. Like I thought that was like brilliant, and I will be doing that going forward.
Yeah. Cool.
So, oh yeah, I guess I was jumping the gun here. Make it easy for them to succeed. So yeah, you got to give them the like copy and paste decks, like, and you literally say like replace your logo here. Give them the scripts. Give them the webinar. In fact, like a leader in our industry has an approach which I really liked. I mean, this is like advanced difficulty thing, where you just have them record their part of the webinar, and then hand it to you, and then you edit them together your part and hand them the webinar, and that's because I'll tell you the reason this works is like most FOF managers, even the ones that are successful, do not have enormous email lists. Like they're just raising from their network. And so there's really not a big benefit to them doing a live webinar. Like recorded is just fine. Like, and that also takes pressure off them for like performance anxiety. And so, or you could do it live with them. Like you don't have to do the editing thing. I'd say that's a very high volume kind of problem. But like you can just say, hey, we're just going to get on a Zoom. We've got multiple tries. Nobody's here, because like they probably would not be able to get a bunch of people to a live webinar anyways. And it's also just not needed. I want to just say like, it's not needed. They just need the webinar so that when they introduce the opportunity to their friends, they can say, hey, go watch this before our next conversation, so that they don't have to represent and that they stay on message.
Take the pressure off.
Yeah. The other thing, both Rohan and I do this, is run it as a cohort. And that's because, with a closing, that means everybody's on the same schedule. And that also like helps your time. And then the other thing that I do at the beginning of every cohort call is I have everybody share their wins. And that's like really important, because like the first thing you do is you like, for example, week 1, which I always do, is I'm like, you need to call or text 30 people a day. And that everyone who actually does that, and I give them a script, obviously. And everyone who actually does that, I mean, every single one, when I ask them for their win the next week, they're like, I can't believe it worked. Like people are interested. I have filled up my calendar, and I'm like, wow, look, guys, look. And it's proof to the audience, or the audience, their fellow members, of creating the social proof that this is all possible, and like getting them very motivated.
Like good
so,
momentum too, like to share the wins like that, like
yeah.
to see that like the others in the cohort are successful. I think that just
Well, and if they followed the program, it's showing that those that followed the program are seeing success, which you like, and that the cohort is, so it's not only that it's a better use of your time, which of course it is, but I also think it leads to better outcomes and proof sharing and keeping everybody motivated. Then what you should do though is like pretty quick, I'd say by week 2, like seriously by week 2, for example, Brooke in my group had already raised the 500K. That guy you separate out. I mean, he still comes to the cohort calls, but like you start having one-on-one calls with them on a biweekly basis. You know, you got to identify your high performers and then invest more in your winners. I'm not going to say cut your losers, like they can still come to the call, but it'll be very clear early on who's succeeding more and who's not. And then you got to double down on your winners. Then, like I said, yeah, so you treat them like a top tier LP. You know, what do you need? What can I help you with this week? Can we do any more content? What are your big Q&As? Like, what are your big objections that you're getting? Working on objection handling scripts, everything like that. And then, you know, this last bullet point I will harp on because so with my sales and marketing hat on, my highest ROI marketing activity, I mean, in my company is our fund updates, period. It generates more inquiries, generates more like unsolicited people saying, hey, I've got some money. I'd like to do another deal with you. Like for some reason, some GPs like don't do this enough. I'm of the opinion that like doing your fund updates, like this is like your biggest money making activity is keeping communicating with your LPs. It's totally selfish, I would even say. Like not only do the LPs like get their information, but actually we raise the most money from doing really good fund updates very often. So yeah, and then make sure that your fund managers do that and like hand them the fund update. Say, hey, go present this, you know, or you know, get on a call with them and record it. Stuff like that.
Yeah, people just want to know how their investment is performing and like just being on top of that. Like it's not I don't know. I think this is like one of the best nuggets of this presentation is like this is a really great way and it's just extra communication. Like
Yeah.
people just want to know.
Well, and also, I mean, I'd throw a stat with that. Early in my career, we heard from a consultant. I was like, how much? Because clearly this is a flywheel thing and that repeat LPs is the name of the game. I was like, how much of every deal will I raise from a repeat investor? And she told me 2/3. I would say to this day, month by month, 2/3 is kind of like the minimum that I raise from repeats. And the new investors are like less than 25%. And trust me, we put a lot of effort into getting new investors, just that the vast majority of the capital we raise, and we raise about $1 to $2 million a month, like just people repeating. And the way you do that is give them a great experience and give great fund updates often.
Yep. Cool. And then where Tribevest comes in, because we've been leading up to this, is we help your fund manager succeed. So our platform is built specifically to support fund managers and their sponsors for any real estate capital raising project. Like if there's a deal, a fund manager and investors, Tribevest is a really good fit to help from the fund to fund formation, the compliance, the banking, the investor onboarding, the distributions, the tax filings, literally all the back office admin that you don't want to deal with as you're scaling and building your business. We handle it. So we just bring operational simplicity and a scalable infrastructure to anyone that has a capital raising project. We've helped over 150 fund managers. We've set up over 200 fund of funds and manage them. And there's been over $100 million in capital raised through our platform. And so really like where we saw the opportunity was really what's broken down in the new way versus the old way. And we're just making it safe and scalable, where you don't need to be raising institutional capital to be successful at this. And so like anyone that is, we call them independent capital aggregators, anyone that is like a one person shop can do this, like with the back end infrastructure of Tribevest. And so the new way, we've lowered the startup costs significantly. The time to startup is 5 days versus weeks where you hire an attorney. The management's done for you because it's all included. And at like a fraction of the cost that you would normally pay for back office and compliance. And then the minimum raise, we've significantly reduced it. So
Mm-hmm.
before, like you had to raise $5 million for any of this to work out where you would be making money. And now with Tribevest, we've lowered that to $500,000. Like
That's the most important data point on the slide. Like that's
Yep.
like it all leads to that data point,
Yep.
which is because I've done it the hard way. We've done it from everything in house to we did it where we outsourced fund admin, but still had to hire an attorney to write me legal docs for 13 grand. And then with Trivest, $5,000 startup costs. And then the key there is it makes it so that I can raise a 500K fund and have that be a win for me and a win for my LPs. Because
Yep.
like if you undershoot your raise and you spend all this money, that means that literally just the fund operating costs are eating up all the returns. That's a disaster for everybody involved.
Yep.
And it makes me say no to projects versus with Trivest, I can say yes.
Right. Yep. 100%. So how's it work? So if you're a lead sponsor and you're interested in this, essentially we have a consultation with you to talk about the things that you need to, build this program. And we're getting more to like a done for you model, but that would include like the program guide, talking about your funnel for your fund managers, and then the economics per deal for your fund managers and their LPs. We have a partnership agreement that just outlines like expectations that like you're going to be launching this program and then what Tribevest SLAs are. And then really it's just like a rinse and repeat per deal. So we have our deal intake process. You're handing off fund managers to us. We're spinning up their SPVs or fund of funds, and we're wiring those funds over to the deal once they've raised their capital. And so what do you get with Tribevest? You get a done for you fund of funds program. So an overview, your fund of fund economics, help with your ICA funnel, early access to Trident. So little sneak peek here, but we're designing the only platform to help sponsors manage and empower fund managers to launch and manage a professional capital raise. And that's in development and coming out by the end of this quarter. So we're really excited about that. And by being a partner of Tribevest, you get early access to that. You get priority fund to fund setup and execution. And this is at no cost to you. Like we monetize at the fund manager level, it's built into the fund to fund economics. And so everyone knows and is set with those expectations going in. And really, we're here to help you create a program that's everlasting. And so again, what do fund managers get with Tribevest? So everything from the entity formation, getting the business bank account set up with all the banking services included. We draft the offering docs for the fund to fund, so the subscription agreement, operating agreement, PPM. We do all of your investor onboarding, so we take care of those wires and the signing of the documents and collecting accreditation letters. And then we do all the ongoing client services, so distributions and K1s, and then we, see it all the way through dissolution. And again, like it's like compared to everything else in the industry, like a $5,000 setup fee to do a capital raising project, if you're raising $500,000 or more, like no one else is doing it like this. And then there's an annual service fee to do the K1s and the distributions based on your investor counts. But like we're getting this set up and off the ground running for you in 7 business days. And so I think if we're like looking back up the funnel of like you qualifying your LPs and getting them to sign that LOI, as soon as they get handed off to Tribevest, like in your like you guys have the confidence that this is going to work, like we're getting to work. Like this is our bread and butter. We're setting up the entity and we're getting you ready for the capital raise. And then just a couple success stories to highlight. So Lone Star Capital is one of our partners, and they've done 5 deals with us. They've had 16 fund managers come through and raised almost $10 million through their fund of funds program. And then we've got Aspen Funds, who's done 5 deals or funds, and then 33 fund managers have come through from them. Almost $20 million raised through their fund of funds program. And like for them, they stand out because they have a company goal of doing this. Like
Yeah.
it's something that's baked into their goals as a company. And I think that's really important. Like once you're like seeing success with this and to get buy-in from your company to grow and scale this is really important. So they have a company goal of capturing 40 fund managers in this year and are well on their way to doing that.
Yeah, they're a top-notch company in terms of their execution on their fund of funds program, without a doubt. Like we look at them and try to model stuff that they do.
Yeah. Like over here, like they create like their own like dedicated fund manager data rooms and like they have a calculator walkthrough, like getting started guide. Like they've taken the time to do the things that Richard walked through earlier.
Well, and I think that they also have like at least one that I know of person on staff whose only job it is to run this program. I
Yep.
would imagine there's more than one.
Yep. And then we have some frequently asked questions here. So I can just run through these real quick and then we can get to the Q&A. Is that good, Rohan?
Yeah, that'd be great. We got a couple good questions here, so yeah, it should be good.
Cool. So how do I qualify fund managers? Like we just went through that with you guys, but like again, like we're like just to set the stage, like Tribevest is an administrative platform. We're not a recruiter, so like it's your responsibility to do these things. We're just here when you're ready. So we set up all the infrastructure in the back office, but it's on you to like go and qualify those individuals that are going to be raising capital for you.
I would be less polite on your behalf to do you a favor. I would say I've heard stories of people are like, they go and talk to their LPs and say, "Hey, do you want to be a fund of funds manager?" And the guy's like, "What's that?" And then they say, "Go talk to Tribevest." And then they
Yep.
call Tribevest and they're like, "Did you sign him up for my program?" No, that is not their job.
Yep. Yeah, that's the best way to put it, Richard.
Yeah. Like you need to sell them on becoming a FOF manager.
Correct. We're not doing it for you. We're not extension of your sales team.
Well, yeah, I would also like, I mean, this is why we spent a lot of time talking about the webinar and all these processes that we've done. I mean, that's the point of, run the webinar, run the playbook as we mentioned it today. And then once you have that non-binding LOI signed, then I feel that Tribevest, is in a good spot to work with them. So,
Yep.
run it as we talked about it. So I think, I hope we gave you guys what you guys should be
Yeah.
doing.
Yep. Should I wait until I have a deal under contract? Not necessarily, like, especially
Yeah,
like,
I'd say no.
yeah, like that becomes the sole
Yeah,
focus is
no.
when there's a deal under contract, and like you're not gonna want to spend time building out a fund of funds program. So like, do it with
I
when there's not
interview
a deal.
capital raisers. I interview capital raisers every week on my podcast, and then I have a "What's your tip?" in the onboarding question. At least half the people fill out raise the capital before you need it. So
Yep.
I would say like that applies here. You need to recruit your fund managers before you need them.
Yep. Agree. Is Trivest my attorney? Nope. We're a financial technology company. We're not a law firm. We're not an attorney. We're not an accountant or broker dealer. Like we don't give legal, tax, or investment advice. We do have an SEC attorney on staff. Seth Bradley is our chief legal officer, but he's not your attorney. So just yeah. Um, and then is this a done for you capital raising service? No, like we don't, again, like we don't raise the capital for you. You're responsible for sourcing and managing your fund managers. And yeah.
Yeah, I think we had a question in the chat of like where do I find, fund managers if like I don't have an LP base? That was someone asked. And as I put in the slide there, like education communities, masterminds, like these education communities, they're training like people to raise capital. So like they're training fund managers. Like you go there and like, there's like 20 of them. So like I mean again, it's not easy
The
for
other
you.
thing I would say to that, I saw your response in the chat. The other place we found success recruiting independent fund managers, though, like I said, this is hard to do, is they're all on LinkedIn. And where do you find them on LinkedIn? All you have to do is find one that posts a lot and gets a lot of engagement. And then I'm willing to bet you 80% of the people engaging with that person's posts are other fund managers. And so
Yep.
then you just like pull on that thread in various directions of finding, because they all have their own little community where they all talk to each other and all gas each other up, as the Zoomers would say. Um, and then just DM them. And they're salespeople, so they take meetings.
Cool.
Yep.
All right, awesome. Ready for a question?
Yes.
Yep.
All right, cool. Let's do it here. So, Robert asks, can you use Tribevest if you're both a lead sponsor and fund of fund manager? Also, can legacy deals be added to the platform? How does that work?
Yes, I would say from like a lead sponsor perspective, like we're not putting together, we like put together fund to fund specifically, so we wouldn't be able to put together your docs for like the deal that you're operating. But if like you wanted to use like some of our services, we could do like some sort of a la carte, but I would say like for like that piece, like we'd have to talk about it, but our bread and butter is like the fund of funds because we've templated those offering documents. Um, and so that is really what you would use us for. And then as far as like existing things, yes, like you could migrate existing deals over to our platform. We've done that before also with a handful of fund managers. And so there's just we'd have to know like cap table and like what you've done from like a tax perspective and like all that back office stuff, but we have a checklist for that. So yep, we can migrate.
Yeah, I assume from his question he means like he's a lead sponsor who wants to set up a fund of funds program. I assume that's what he means, so he probably should be just fine from my understanding.
Yep.
Cool. Corey has a good question here. As a lead sponsor, can I be the first fund of fund manager for my project? How would that work?
Mm. So the lead sponsor would be the fund manager?
Yeah, I guess like if I think Corey's question is like Corey is like a newer lead sponsor. He has not
Uh-huh.
raised capital before. He's trying to like find, I assume, the best way to raise capital. Like, I guess what would be your advice for him?
Yeah. So what I would say, you probably need to start from the basics, and that is learn how to raise capital yourself. And then have success, learn how to build a funnel, have a performant funnel. And I'll define funnel. I mean, a way of one, acquiring new investor leads and raising awareness for your deals and your services. Number two, convincing the people who become aware of you to become LPs, and then three, collecting checks. Like I would say that like you have to have that figured out on your end in order to like then train someone else to do it, or even work with someone else to do it. Because even I've worked with existing fund managers before, like not just people we've recruited. In fact, we started working, like the reason I shifted to recruiting is because, or growing my own, is that recruiting was so difficult. But I have done it. And even those people like need a system. Like I'm talking like very successful people, very successful fund managers who raise millions a year. Like they need your webinar. Like that's what they want. So you need to be able to hand them the full marketing kit for them to jam. And that will be, if you do not have that, then that will be a factor against you in deciding whether or not to raise for a deal. So I would say like my advice to you, and it's tough, is like you got to put in the work and learn how to raise capital. Like, and then once you know how to do that, in my opinion, that is when you can think about expanding to an advanced strategy like fund of funds.
Cool. I think it's a good,
Yep.
Richard, obviously you're an expert here, so I think it's a good,
Yeah.
get your opinion
And
here.
not a spokesperson for Tribevest, so I can give you
There you go.
No,
my
that's a
opinion.
great no.
It's a good
That's
one.
a
It's a
good
good one.
answer.
All
Yeah.
right. Let's see here. Regina has a good question here. So
Oh, hi, Regina.
Regina is an LP, looks like, and
In
she
my,
wants to get
she's one of
connected.
mine.
Oh,
She wants to get
nice.
connected
Yeah.
with GPs who have like a fund of funds program. So I assume she wants to set up her own fund of funds
Yeah.
from my understanding. I guess what is do you have any advice there,
Yeah,
Richard?
Regina, send me an email.
There you go. There you go.
Yeah, well, I would say, okay, I will give the non-tongue-in-cheek answer to that, which is there is absolutely no problem finding a GP for you to like go. And one of the beauties of this model, okay, I'll expand on that. Okay, I think the beauty of this model versus what was previously the industry standard, which is co-GP, was it is dramatically harder to convince someone to make you a co-GP. And I would also say it's an inferior setup too. Because they have to like take a lot of risk by putting you on like in their management entity with management rights and like all of these things that are super hard, if not impossible, to unwind if things go wrong. Um, Versus just coming to someone and saying, if I bring you $1 million instead of 50K, will you give me better economics so that I can build an SPV in the middle? Much easier argument, because there's very little to no downside for the GP at that point. They're just like, yeah, if you can do this, sure.
Yep.
Cool. Aaron has a good question here, which is, how should we handle LPs who have like one or two other people to refer, but like they don't want to set up like a fund of funds. Like, what do you, is there anything for them, or is it just, just refer them and, be done
Well, I
with it?
would say legally you can refer people, but it's very tricky to pay you for that. If not, the answer is probably no. So yes, you can refer people, but can a sponsor pay you for that? Very difficult. If not, the answer is probably no.
Yeah, I mean, yeah, and this is the whole point of the fund of funds, right? Right. Brittany? I see that's the whole reason
Yep.
this whole saga has been set up.
Compliance. Yeah, we're trying to do the safest and most scalable method, and that is fund of funds.
Yeah, I think again, it just depends on your LP base. Like, there's just certain people who do really well with this, and again, you know, I think as we mentioned, it's that 500K number where it makes sense economically for them to do it, right? Brittany, is that your experience?
Yep.
Cool. Awesome. All right. Last question here. Evan asked, which is a good question here. If I raise capital ahead of time, is there like a timeline that has to be deployed? The meta question is, how can I raise capital before I have a deal and make sure I'm not like, on the hook or penalized, or, do it in the most proper way? I guess, Richard, here for you.
Well, I would give you my legal interpretation for this, which is risky because I'm not an attorney. So as an SPV manager, the exemptions you operate under, you do not actually have discretion in what deal you're putting it into, which is why, like, actually the Tribevest docs, one of the reasons I'm a big fan of them is that they are very forward about the purpose of this fund is to go invest in this deal. And so what you're talking about is a blind pool fund, which with the exemptions that most SPV people, such as myself, are comfortable operating in, it's very hard, if not impossible, to do that in a blind pool. So what can you do though? Is you just say, if I had a deal that looks like X, Y, and Z, would you invest in it? Get a number, get a verbal commitment, keep it hot, give them updates, and then a percentage of that will convert. Probably a decent percentage of that will convert when and if you have a deal. Like that's the common way. When people say raise the capital ahead of time, that's actually what they mean. It's like a tongue-in-cheek way of saying, like, get people verbally committed to investing in a certain type of a deal with a certain type of aspects. They're like, oh, so if I had a deal which paid you 7% cash on cash in the first year, is that something you'd invest in? And if it was like, value add multiple family in this metro, they're like, yeah, I would love that deal. Okay, and you would invest in 100K if I brought you a good deal? Yes, I would. Then you keep them warm, and then you call them back and you say, hey, I got that deal that we were looking for. I'm going to need
Yeah,
your wire on this date.
I think that, and then also, I think in the context of how we wrote the slides of raise capital ahead of time, we mean like set up your fund manager program. Because again, you have to, like, get the docs, do your webinar, market it to LPs. Like, from my experience, it's about 30 to 45 days of work between the marketing, the talking to people, the getting the LOIs, all that work. So you might as well start doing that now. That way, like, when you have a deal, like, you have your 3 fund managers who have, like, kind of committed to you, and then, you're much in a much better place rather than just like, oh,
Yeah, it's the same conversation I was modeling for an LP, just for a fund manager. Just when I have a deal that looks like this, will you start a fund of funds for me? Yes. Okay. Then the time comes and you have the conversation. Okay, we're ready. Let's jam.
Mm-hmm.
cool. Awesome. We're at the top of the hour. Anyone have any final questions or anything else to add? Cool. I think we're good.
That's a wrap.
Cool. Awesome. All right, good stuff. Thanks everyone.
Thank you.
Brittany, Richard.
Thank you, Richard, for coming and joining us today. Great conversation. Thank you, Rohan, for moderating. Really
Yeah.
appreciate you.
Thanks everyone. Have a
And
great rest of your day.
yeah, thanks, guys. I'll
Okay,
end
it's
it.
over.
Hold on. Yeah.